You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Henry the Flowmaster Schwartz from SEBO. The Option Block is brought to you by SEBO. When it comes to trading volatility, trust SEBO, the creator of the VIX Index, for in-depth and relevant information. SEBO's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again here in the Chicago studio. No more traveling, at least for this week here for the old Option Block, which means we are back for your bi-weekly options extravaganza. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-exciting, at least we tend to think so, Options Insider Radio Network. Reminding you, if you like what you hear, do keep rating and reviewing out there on your platform of choice. Really does help all the new kids continue to discover the content out there. And, of course, if you want more content in your lives, and really, these markets are crazy. Who doesn't? Who doesn't want a little bit more content, education, analysis, hand-holding, place to ask your questions, all sorts of fun. TheOptionsInsider.com/pro is the place to go. We have our old friend, the Viceroy. It's like we put up the bat signal. We were just talking about him last week, and he heard his ears were ringing. And so he's coming on tomorrow to answer all your questions on the Pro Q&A session, Options Oddities, the end of the week, live access to everything else we do, giveaways, a whole bunch more. TheOptionsinsider.com/pro is the place to go to learn more. And it's the beginning of the week, listeners. It's our kickoff show for our broadcast week. So we like to do things a little bit differently, kick things off, having a little bit of fun. I am joined, of course, by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management, as well as by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Gentlemen, get your hands on your buzzers because it is time for a little bit of Guess That 80s Wrestler trivia. All right, there we go. Suitable wrestling trivia music. All right, get your hands on the buzzer. I have a feeling you're going to know this one quickly, or you may not. All right, we're going to shift gears a little bit today. Talked a lot about wrestlers. We've done all sorts of heels and faces and big names. We're going to shift to the other side of the business. The managers, the guys and gals who accompany the wrestlers out to the ring. You know, they play a big role. They help sell the stuff. Of course, they're out there distracting the ref. Some of them are throwing objects into the face of other wrestlers in the ring. All sorts of fun. There are a bunch of different managers who do a bunch of different fun things. But there's usually one who is considered the best. He was a manager. He also did some commentary roles. The audience had a name for him, then he had a name for himself. The audience like to pejoratively refer to him as the Weasel. But
Buzz.
okay, I heard TOSAW first. But he called himself the Brain. All right, Mr. Uncle Mike. Mr. Uncle Mike. All right, you guys got it. Uncle Mike, I heard you first.
Bobby the Brain Heenan.
Yes, of course. Yes, there we go. That was kind of an easy one, but I wanted to kind of ease you in on the managers before we went deep with some crazy ones out there. Yes, the Brain himself, Mr. Bobby the Brain. I didn't realize this, a Chicagoan. So that kind of surprised me out there. So that was. I don't have a bonus one really for him. It's kind of just him, but fun nonetheless, listeners. So there you go, a full point to the Uncle-list of Mikes as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading out there. And yeah, it's mostly green on the screen today. It was a little bit mixed earlier in the session. We had the NASDAQ hanging out in the red when we kicked things off. S&P was threatening to get there as well, of course. Coming on the heels of the weekend of the news over the takeover, acquisition, fire sale acquisition, call it what you will out there, of Credit Suisse by UBS. We had a lot of people asking, even on our Friday Options Oddity show in the pro side there, what should we do with Credit Suisse stock now that it's around $2? And we all said pretty much, the smart answer is just to short it because it's probably going to zero, but you don't want any of that risk at all. That's just, that thing could pop. Crazy news could happen, could have a short squeeze. You don't know. And it turns out the right answer was shorting it because I think the Credit Suisse stockholders getting pennies on the dollar pretty much, somewhere around, I think, 75 cents, I think, whereas it went out around $2, I believe, on Friday. So not a great deal for the stockholders. Worse for some of the bondholders out there who are kind of left holding the bag completely, which is a weird scenario. I don't usually see that. Creditors usually in line in front of stockholders. So that was making people nervous to start the day as well. What are we doing? How is the bond market going to look? Which is why there was a little bit of unease. We tried to rally early in the session, then they kind of fell off. Most of the overseas markets were down quite a bit off the news, so it was mostly seen as not a great thing. We're kind of rallying off it today. NASDAQ up about 0.2% as we're kicking off the show. S&P up nearly a full percent, 0.9%. So any news is good news once again for the S&P today. The Dow leading the charge up about 1.3%. That means when we kicked off the show, the VIX was a little bit north of the 25 handle, about 1.4 points higher, about 25 and a quarter. VVIX, a 117, so still frothy, up about 7 points. And given the fact that we're whipping around all over the place, to make some sense. VXX, 55 and a half, up about 3.5 points. UVXY, a 640 when we kicked off the show, up a little over half a point, about 0.55 to be precise out there. SVIX, 1360, down a little over a point, about 1.15 points. UVIX, 24.6, up 2.5. And VolQ, 26, up 1.8 points from this time last week. All right, we'll start with our winner for this week, this week's champion, Mr. Uncle Mike, sir. First, if you have any enduring memories of one of the greatest managers and color commentators out there, Bobby the Brain Heenan, have at it, sir. He managed Andre, managed everybody. Great heel manager. And then B, what else is lighting up your tape in today's Uncle Mike kind of day?
I mean, there's no doubt ever that Bobby the Brain Heenan is the greatest professional wrestling manager ever. I mean, there's Bobby the Brain Heenan, and then there's everybody else.
But could he throw salt like Mr. Fuji? Could he rock a microphone like Jimmy Hart? I'm just saying.
I mean, yeah, he could. He was Bobby the Brain. And he was from Beverly Hills, even though in a later shoot interview, he confessed that he had never been to Beverly Hills, but that's where he hailed from. But yeah, no, Bobby the Brain, he could pay somebody else to do it if he had to. He was the best there ever was. not a lot of people know this about Bobby the Brain Heenan, but yes, he was a Chicago guy. He started out with Bob Luce. I don't know if any of you real old timer, maybe Mark would remember the Bob Luce wrestling that you'd see on like some type of UHF channel that you'd see in the areas. They'd come to local high schools around the Chicago area, but that's where Bobby the Brain got his start back in the 70s. And then I went on to the AWA with Vern Gagne, and then with all the other AWA talent that went to the WWF in the early 80s, he went with them. And, one of my favorite, I could go on for a very long time on Bobby the Brain Heenan, but the first one that comes to my mind is actually from his WCW days as a commentator. There was a wrestler that had a T-shirt, and on the back of it, it said "cheat to win." And then one of the other commentators said, Bobby the Brain, you probably like the fact that he has cheat to win on his shirt. And so Bobby the Brain Heenan just said, no, I think it's terrible that he has that on the back of his shirt. And so the other commentator didn't know what to say, because Bobby the Brain Heenan is supposed to be this bad guy heel. He was saying, but Brain, and it was just hilarious listening. I think it was Tony Schiavone. He was double talking. He did not know what to say. You could just hear how nervous he was. And then finally, Bobby the Brain gets in there and says, cheat to win should be on the front of his shirt. And that was just classic Bobby the Brain Heenan all the way. And, it's sad that he died. It's sad that he couldn't really talk that much at the end of his life. But, he was just an amazing manager with the talent that he had through the years, the Heenan family he had in the AWA and the WWF. Bobby the Brain was the best there ever was, no doubt about it. So on that note, with the markets today, it looks like there was some Bobby the Brain types dealing with the banks recently in our markets, but that's the way it goes. And my thought on the whole banking thing, whatever side of the political aisle you are on with our government, what a bunch of crap. It's just, we're in a position to where banks are pressured to make sure that they have something to do with their reserves. And so what they had to do was put money into long-term debt, long-term bonds. They didn't have any junk per se. They had good stuff, but with their plan, they're looking to hold it for the duration. Now, of course, when people want to, and I'm referring to SVB, this is when people want to take their money out of their checking accounts, savings accounts that aren't paying anything, then that's the risk with which they have to take. And so the banks are forced to be put into a position to where then they have to sell their bonds at a loss, to where if they were able to hold their bonds for a longer period of time, they would have been just fine. But here's where what a bunch of crap comes into play. The fact is that, I'm just an investment advisor. I'm just a financial advisor, and I know how to buy puts on TLT. If I had that much exposure to long-term debt, whether it's corporate, this, that, or the other, all this could have been solved if they would have just bought some puts on TLT, or bought some put spreads, or just done something to hedge it in some way, shape, or form. Now, of course, you wouldn't want to do it on TLT. You'd want to do it on the futures because it's bigger contracts, better tax treatment, etc. But the point is that if our cause of what we have on this show would help the masses, if people would use some type of hedging in some way, shape, or form. Now, does it make sense to hedge everything? Good gosh, no. But if SVB would have hedged stuff, then I think that we would not be in this mess, or other banks, if you will. And so I think that whenever you are trying to buy long-term debt to finance short-term debt, it works a lot of times, but this is just another example of when it doesn't work. And so whether they should have been bailed out or not, that's up to the listener to decide. But it's one of the things to where these people have all these advanced degrees and econometrics and this, that, and the other. Just buy some flipping puts, for crying out loud. It ain't that hard. So that's my rant on the banking sector. In terms of where we're at today, we do have an Uncle Mike type of day today. We are up nearly 1% on the S&P, which is always exciting. Bonds are actually relatively stable from the how much buying there was last week. We are selling off a little bit in the bond market, not too much. Just looking at the 10-year as well as corporates. Silver's relatively flat on the day. And then, of course, the main thing that is driving up this market from the standpoint of sectors would be financials. That's up 1.5%. But let's not discount energy. Energy's up 2.5% on the day, looking at XLE. So we do have that in the mix. And then the other thing that I do want to say that I think it's important that we know of, and that is Bitcoin. Bitcoin is rising on all of this craziness in the banking sector. So does that mean Bitcoin is safe? No, I still stand by my website, bitcoindoesreallysuck.com. But we do have a little bit of buying involved in that. And I think that's reactionary just because of the fear that's involved with the banks these days. So a lot happening in the markets today. And we do have a Fed announcement coming up in the near future, but we'll save that for around the block. Back to you, Mark.
Crypto, the new flight to quality. You must love that, Uncle Mike. That must be just music to your ears out there. Everyone flocking into the realm of crypto. Crypto taking a little bit of a break today. We'll get more of that goodness coming up in a little bit on Crypto Rundown. All you pro folks will get that live. All you on-demand folks will get it later on the network side. Be joined by Mr. Bill. He's usually our resident crypto bull out there, so he'll probably have some fun things to say about what's lighting it up out there. Let's now turn our attention to the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, I should point out first, even though Mr. Uncle Mike did take the victory today, he was very magnanimous last week because you didn't show up last week, so I was going to award him a point in your absentia, and he instead opted to award that point to the Rock Lobster. So now our totals stand as of today. Uncle Mike still in the lead with 5. You're bringing up the second place, I should say, with 3.5 points. And the Rock Lobster's on the board with 1 point. So what say you to that, Mr. A Meatball? B, any enduring memories of the brain? And then C, what's catching your eye out there in the markets today?
I loved. Mike, thank you very much. I appreciate your magnanimousness. And the brain, yeah, I loved him. Him and Gorilla Monsoon. You know, when we first got cable, they had that USA Network show that would be on, I think, Monday nights. It was kind of a predecessor to Raw. It was like, I forget what it was called, but it was basically Gorilla Monsoon.
Primetime Wrestling.
Primetime Wrestling. Thank you. Bonus point for Mike for that one. I love that show. Now, they didn't show a lot of good matches, but when they did, it was really exciting. But Bobby the Brain and Gorilla Monsoon, you didn't mind because the two of them were so hilarious going back and forth. So that's probably my big enduring memory. And then let's not forget his beef with the Red Rooster, and he brought in the Brooklyn Brawler to protect himself. And it was the lone big push the Red Rooster ever really got.
Yes, let us never forget the majesty that is the Red Rooster.
Brooklyn Brawler was the most underused wrestler in WWF history. He should have been pushed. I loved the Brooklyn Brawler.
Everyone did. He should have been pushed. But yeah, so markets are showing a nice little bounce today. But it's coming from different areas because the NASDAQ is really soft, whereas it was kind of holding up the market. And on the upside, it's the Russell 2000 leading us. The NASDAQ's basically flat to downish all day. S&P up, but the Russell and the Dow are clear leaders. So that I think is kind of the interesting kind of thing, and points to maybe some stability forming along banks and financials, because I'm looking and XLF is up 1.5% today or so. Definitely looking stronger. Some of the banks, the mid-cap banks, are up. JP Morgan is up. Bank of America, the mega caps are all up. So it's much better.
Much better indeed. Let's see if things are much better out there on the old volume front. We'll kick things off as we are wont to do in the major indexes. Listeners, let's go out to the old volatility index itself. By the way, don't make the mistake I did, listeners, when I was joking about it on the show a few weeks ago, about that new Spanish language streaming service, VIX.com. I typed it into my browser to check it out. And now, of course, whenever I start typing VIX, it immediately goes to VIX.com. That is very annoying. So don't make that mistake, listeners. You'll live to regret it, unless you like yourself a little Spanish language content. And by all means, indulge. People are indulging right now in a little bit of VIX options paper to the tune of 852,000 contracts on the tape right now, listeners. That is, I think the technical term is a whole heck of a lot of paper, especially given the fact that the ADV has come in a little bit. It's still higher than it was a couple of weeks ago, but it's down from where it was on Friday. It's down about 20-odd thousand contracts to 801 right now. Still looking robust. Looks like we got April 30s and 35s going up today for over 100,000 contracts each. So a little bit of vertical action, it seems like, here. And yeah, looks like it went up blocks of 50,000. So yeah, interesting stuff out there. We'll talk more about all the specific paper when we talk about vol views on Friday, listeners. SPY, a little over 5.1 million contracts right now. The ADV, a little over 9.5 million out there. The S, 1.55 million. The ADV, 2.89 million. That is a heck of a lot of paper out there in the S for an ADV, listeners. Let's pull it up. Let's just go see. Let's do our dance, because why not? Actually, there is one contract in the top 20 most actives today in the S, listeners. That is not expiring today. It is at the bottom. It is number 20. It is the April 3200 puts. So that's oddly far out. Usually when we see this stuff, it's usually expiring the day after. But nope, this goes all the way out to April. And then we go to the top 40. There are two. And also in April 31 halves. Looks like maybe a bit of an April put vertical sneaking in there out there. So that's really it. That's not popping off today. So 38 of the top 40 contracts in SPX today, listeners, all going the way of the dodo with the bell today. By the way, I was down there. I was talking to some SIBO folks down at FIA last week about this stuff, about all the zero-day phenomenon. And they were talking about how they've been crunching the numbers on it now, too, and seeing that actually a lot of this paper doesn't even get held to the end of the day. Most of it is about 2 hours or less. So kind of intriguing. And we already know it's already short duration by definition, but then the holding period beyond that, even shorter. So intriguing stuff. That might be a good question of the week going forward. If you guys are trading, if you're slinging this zero-day stuff, how long are you actually keeping these positions on? Intriguing stuff. We have another good question of the week. We'll get to that in a little bit, listeners. But now let's keep going here. Let's go out to small caps, IWM. The meatball is talking about IWM. IWM leading the charge today, up nearly 2%, 1.85%. So small caps getting a lift after just getting annihilated for the better part of the last month out there. They're still off about 7% just this month, even with today's rally. So, yeah, small caps have a way to go, but they're trying to climb out of the hole today. The ADV, about exactly 1 million contracts. You know, if you've been listening to the show for a while, that can fluctuate quite a bit. 1 million is pretty high, so it's a high bar for IWM. Seems like it's going to hit it today, though. And the Qs, 1.62 million contracts on the tape. The ADV, a little over 3, about 3.06 million out there. Let's go on out to the top 10 most actives, see what the market holds in store for us today. Number 10, listeners, this is kind of a frequent offender. Ever since they discovered they could just cut jobs and the street loves it, and also buy back a whole bunch of their stock and the street loves it. It's Meta coming in at number 10. Kind of a light single name day, only 195,000 contracts. That's what it cost you to break into the top 10 today. A Meta up, not quite a buck, about 85 cents, trading right around 196.5 right now. It's like they had quite the start to the day. They opened at 198.5 and then immediately got shellacked down to 193.64. So almost a $5 drubbing in the span of a few minutes on the open. And then they rallied it again all the way back up to 197 1/3 at 11 o'clock before crushing it back down to right around 195 again. And now rallying it again to 196.5. So they've done a lot of living, I should say, even by this early part of the session. Wow. So Meta, even though all that not amounting to a heck of a lot of paper, we got to go to number 9 to get a more respectable number. We jump quite a bit from number 10 to number 9. We go from $195 to 292,000 contracts out there. This gets us to a name I don't think we've ever talked about in our top 10 out there today. This is First Republic Bank. You may have heard of this one recently, listeners, and probably not in the best of lights. Of course, this one getting caught up in all the contagion bank failure fears last week. Still very much a ongoing question today. It's off $7 or 30% today, trading right around $16. Let's see, it got as low today as 11.5 before it bounced. So this one's been all over the place today. Let's kicked off the day at 18.5. So rocking and rolling out here. Let's just look really quickly, see what the hot trades are in FRC today. It's 46,000 of the March 5 puts. 5-0. Wow. Have changed hands today, followed by about 30,000 of the March 10 puts. So not surprising that it's all puts all the time. The fact that it's the 5 puts. That's interesting. Of course, given the dire news over the weekend, maybe not surprising people would be intrigued by some puts in FRC, but nonetheless, quite the palooza paper. 292,000 contracts for number 9. Then we jump up again to number 8. We're only at number 8. We're already at 368,000. So quite a lift from number 10 to number 8. That gets us to good old Microsoft, another perennial top tenner. This one, a very different story than the rest of the market. The other ones, they started off high, they came for it, then they rallied it. Now they're coming back down off the highs a bit. This one, they've just come for it. It opened the day right around 277, and within a few minutes, they were trading 270. So pretty much shellacked at $7. They did try to rally it briefly, got up to about 273.5, and then they have come for it again. And it got down to about 270.5, and now it's hanging out right around 271. Still off about 3% on the day. So bit of a drubbing here for good old Softy after many days of rally out there for them. Let's see, on the month. On the month, they're up 7.3%, 18.5 handles. So nice month for them, even if today may be a little bit forgettable for all the Softy bulls out there. Number 7, Bank of America. Not surprising this one's making it into our top 10 today. Good for 381,000 contracts. Actually kind of unched on the day right now after kind of bouncing around. They've had a range of 28.5 on the high and 27.70 on the low. So not quite as rock'em sock'em robots as some of the other names we talked about, like FRC today, but still enough for 381,000 contracts on the tape. So they're not playing in terms of options paper out there in Bank of America today. Number 6, like clockwork, it's our old friend, the Chip Zone, coming in. AMD, number 6, 390,000 contracts. AMD taking a break today, off about 2.6 handles, trading right around 95.20. Again, good for 390,000 contracts on the tape. Number 5, it's the Amazonians, dropping down a little bit today. 442,000 contracts on the tape, also dropping down in terms of stock price, off a little over 2, about 2.2 points, trading right around 96.80 right now. They're a little over a point above their low for the day. They hit 95.70 earlier this morning before they bounced. So not quite at the low of the session, but nowhere near the high of 98 and about a half either. So intriguing stuff for the Amazonians. Number 4, we have the other half of the chip zone. It's NVIDIA. Good today for 490,000 contracts. Now, NVIDIA catching a bit of a bid today, up nearly 2 handles, about 1.8, at about 0.7%, trading 259 even. That's after hitting a low earlier this morning of 251.30. My goodness, they have rallied this thing since then. And unlike all the rest of the names we talked about, they never really looked back. Once they started rallying it from 251 and change, it's been all upside all the time for NVIDIA. So intriguing stuff out here for NVIDIA here, number 4. And then number 3. Yes, I said number 3 again. So you know it's a weird day, listeners. The fruit company back down at number 3. 533,000 contracts. It's a day where the market can relax because Apple is green. 157.70 is where it's trading right now, up about 270 on the day, or 1.7%. Let's see, how low did Apple get earlier this morning? It got down to 154.15 before they've rallied it. So they've rallied it about $3.50 from that low. So that's a nice little pop here for Apple. And unlike a lot of the other names too, they never really looked back on this one either. Once they started rallying it, it's been kind of all upside all the time. Number 2, not one we've talked about in a long time. And I don't think one we're going to be talking about much going forward once all this noise is sorted out. This is Credit Suisse, trading right about $1 right now, 96 cents actually. So pretty much half of what it went out at on Friday, right around $2 there. So stockholders not exactly getting the gift they were hoping for if you were coming in there on Friday saying, I'm going to take a flyer on Credit Suisse stock at $2. We said then, that's pretty much money you got to be okay seeing go to zero. And in this case, you're not going to zero, but you lost half of it. You're down to 95 cents right now as all the details of this takeover bailout, call it what you will, come into fruition. Again, good for 585,000 contracts. Let's just take a quick look-see and see what the folks are slinging out there today in Credit Suisse. If you said 45,000 of the one calls have gone up today, then you would be winner, chicken dinner, followed by 41,000 of the one puts. And not surprising, that one strike pretty active out there to the tune of about 86, 87,000 contracts. And then the big dog, once again, that ends in Y. It's Tesla, trading 183 even right now, up about 3 points on the day. The low came earlier this morning, 176 and about a third. So they rallied this one pretty quickly up to 186. And then it has shed about $3 of that now back down to 183. So a wild start to the session, listeners. A lot of paper on the tape. Kind of depends where you're looking, what kind of day you're having out there. In terms of earnings, we are not quite done yet. There still is more to come this week, including today. We've got Foot Locker. Usually they're a Friday name. Today they're on Monday this week. We have GameStop. You may have heard of them, as well as Nike tomorrow. Looks like they are both after the bell tomorrow. Wednesday, we've got Petco before the bell, and then Chewy after the bell, and then everyone's new favorite, Ollie's Bargain Outlet, also on Wednesday. I had never even heard of this name until there's none of those around Chicago until we had Brian on OPR do an episode on them, and so they've kind of come onto our radar ever since. And then, of course, KB Home, and then Thursday we have General Mills and the Meatball's favorite, Darden Restaurants. Once the earnings move results, and earnings season reports come in from our friends over there at ORATS, we'll get them up there on the site for you. In the meantime, you can check out all the previous reports we have received. You know where to go, theoptionsinsider.com. Click on the Options News and Articles tab to begin your journey to the dark side as we continue journeying right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. That music means it is time to get weird. It is time to get wild. It is time for the Odd Block. Stop me if you heard this one, listeners. We're going to talk about some puts in some REITs and those types of names. We are going to do that maybe a little bit different than you might expect. So let's kick it off here. Let's go out first to kind of think. We talked about so many REITs and related names on the show. I don't think this one has made it onto the show in the past. If it has, it's been quite some time. This is Arbor Realty Trust, ticker symbol ABR. You know, we've talked the Apollos and the agencies and just about every other freaking flavor of REITs that begin with A on the show over the last couple of years. Somehow Arbor Realty Trust hasn't made its way in, but we're going to fix that today. Ticker symbol ABR, like I mentioned, trading $12.16, up a whopping 97 cents or about 8.7%. So a nice little pop here for Arbor Realty Trust. On the year, it's kind of a bit of a different story. A lot of fits and starts, and then a lot of that downside coming again right now. I had a decent year until a few weeks ago. A year ago, I was trading $17, hung out there until pretty much June. Then it took it on the chin in June, down to $12.30. Then they popped it again in August and July, up to $16.50. And then this kind of pattern played out a few times over the year. Rally and then fade, rally, then fade. They faded again in September down to $11.50. And they rallied it again to about almost 15, 14.75 in November. Sold it off to 13 in December. And then they rallied it again, this time in February, up to about $15.50. And it hung out there for a bit coming into this month, right until like the first week of March. Then on March 6th, they started coming for it. And they crushed it down to a low, did she go? 11.07. So it hit its 52-week low just, I believe, on Friday's session. And so bouncing a buck off that 52-week low. So that's interesting in and of itself, but still obviously taking a big drubbing, down nearly 9% just in the past week alone. So a rough week, a rough year out here, even though a decent day in all things Arbor Realty Trust. And I said we're talking about puts. That is what we talked about out here, but maybe not what you might expect. We've been talking about a lot of people coming in and just loading up on puts lately in all these REITs, just gobbling them up, sometimes defying logic in the process. This one doesn't quite seem that way. In fact, it seems like it might be the opposite. It might be someone actually coming in and, dare I say it, selling some puts in a REIT, drawing that old line in the sand. This time it was 10,000 of the July. So they're going out a bit of a ways, not April, not even May, all the way out to July. 7.5 puts. So I said we're trading 12.18. The 52-week low is 11.07. And they're blasting away 10,000 of these 7.5 puts in July for 35 cents. So they didn't get nothing for these. I mean, that's considering how far out of the money that strike is. 35 cents. We are going out to July, so you've gone out a bit of a ways. If you're wondering, that's about an 80 vol. So that definitely accounts for why they got so much juice for that. An 80 vol, that'll materialize in about 35 cents. So I guess they're taking the very daring line in the sand, Mr. Meatball, that if this stock collapses all the way to $7.15, they will happily come in and buy some. I'm looking right now. The lowest it's gotten in recent history was back in the big sell-off in 2020, and the stock got to 406. So it can obviously plumb those depths again, but I wouldn't say 7.5 is a very daring sale. The stock was $12 when they put these up, so intriguing stuff. Mr. Meatball, A, surprising that someone can actually maybe sell a put as opposed to buy them in a REIT. And then B, what are your thoughts on these not quite daring puts, but still somewhat juicy puts in Arbor Realty Trust?
I mean, yeah, I think those are really juicy given where they are and the REITs do look bad, but this is maybe a positive sign that, hey, maybe they're not going to get out of the doldrums, but maybe they're not gonna drop a lot more. Certainly, you could view it that way as potentially bullish. The REITs, which have just been thwacked up the side of the head with a 2x4 and just beaten with a hammer over and over again. So maybe this is a sign that some of the bludgeoning is coming to an end.
You like these? You gonna piggyback on these? Get some of that juice?
No, I will not.
Not diving into the REIT fray.
But it does make me think about whether I want to continue to carry some of my open short positions, or what adjustments I would want to make to those. So it does make me say, I certainly wouldn't be jumping into short ABR after a put sale like that.
That's what we do here on the iBlock. We make you say, Let's see if we could keep that process going here, listeners. Let's shift gears away from REITs and into energy, another area that's been pretty active. If you listened to TWIFO last week, we were talking about all things WTI. WTI breaking the 70 handle, getting into a 60 handle. Haven't seen that in at least a couple of years out there. So that was kind of surprising for a lot of people. Drove a lot of paper. WTI doing well over 1 million contracts, when usually on a decent week, it'll do somewhere around 400,000. So pretty active week in crude oil. If you want to sink your teeth into all that goodness, you know where to go. Check it out on the network. Today, we're going out to Bloom Energy. This is a company out of San Jose. They make solid oxide fuel cells. Interesting. We talked about fuel cells in the past on this show many times, many different names. Seems like a technology that comes and goes in terms of public interest. Never really seems to be ready for prime time, even though people swear about it all the time. Let's see what's going up with Bloom Energy right now today. Trading 1740, up about a quarter of a point, about 1.5%. Like I said, trading 1740 right now. On the year, let's see. Another one that had kind of a bit of a topsy-turvy year. A year ago, it was trading 23 3/4. Then they crushed it in May down to $12. That was pretty much their low. Actually, they broke it. They got down to 11.5 right around that time. That was the low for the year. Then they rallied it all the way to the high for the year. They hit that in August, right around $31.5. They went from 11.47 to 31.47. They rallied it exactly 20 handles over the span of almost exactly 3 months there too. It was August 11th they hit their high, and it was May 11th that they hit their low. Wow. And exactly 20 handles. A lot of even numbers here in Bloom Energy Corp. And then they came for it again by October, hit $17 again. Then they rallied it in February up to 25.5 before beginning its long, slow decline to where it is right now, $17.40. So go figure. Solid oxide fuel cells, a bit of a volatile market. And what do we find out here today? Looks like the same deal. We saw someone coming in here and maybe drawing a bit of a line in the sand. This time, I said the stock is at $17.40. They decided to sell the 14 puts, not go out quite as far. They're going out only to April. They sold them 6,969 times for 26 cents, pretty much right off the bid. That's a 72 vol as well, so that's pretty frothy in and of itself. The stock was pretty much right here, $17.49 when they did this. And there are no earnings in this. The next earnings is on May 4th, so they're not risking any earnings contagion spilling over into their trade here. So, Mr. Meatball, kind of another line in the sand put, this time shifting gears to the energy markets. What are your thoughts on these, and do you perhaps like these better than the others or worse?
Energy, I think, is definitely a spot where you can look at selling premium because the vol is really high. I think it's oversold. It's definitely a level that is starting to be interesting in some specific names. We've been seeing some pretty big call sweepers actually in some of the energy names today. It makes some sense to me.
Let's see if this last one makes some sense to anyone listeners. Let's go out to a name we just talked about. It was kind of dominating our most actives today, almost right behind Tesla. This was Credit Suisse. You know the long sordid tale. I won't belabor it. Trading 95 cents right now. You know how we got there. A year ago, trading $8. So, yeah, they've kind of just been, ever since the invasion happened last year, a lot of people were, remember we were talking about puts in this name and Deutsche Bank and a few others. They were worried about European credit exposure then. Now, of course, other fears have consumed it. But not the best year for Credit Suisse. And, of course, it ends with the whimper out there, off 88% now on the year. A rough year for them. We said right at the beginning of this segment, listeners, that this one obviously dominating the tape today. 46,000 of the one calls have traded already. And that's kind of what lit up our tape here today. In particular, 5,000 lot kind of caught the eye of Sauron. 5,450 to be precise of the April 1 calls. So going out a month. Going up right on the bid for 13 cents. So someone blasting away at the one calls for 13 cents. This was opening at the time. Obviously, 46,000 total have traded today. So it's been kind of a hurricane of paper on that strike. But when we noticed these were opening 5,000 lot. If you are intrigued, it is a 123 volatility. As meaningful as such numbers are in this situation. And the stock was exactly here, 97 cents. So intriguing stuff. This could have been obviously maybe a scoop from the morning that they kind of dumped out for money. Either that or they have stock and they're just trying to get a little bit more for it than it's being valued in this takeover. So at this point, if stock's around $1, if you can squeeze out an extra 13% by doing something like this, I don't fault them. Mr. Rock, I keep calling you Rock Lobster today. Why is that? Mr. Meatball, what are your thoughts on someone trying to maybe carve out a little bit extra yield here in Credit Suisse before it all goes the way of the dodo?
I mean, yeah, 2 cents. Way to go. Awesome sale. Way to go, bro. No, I don't like that at all. It's not worth it. I get why they would do it, but just the risk reward there is just not there. I don't like it at all.
Well, 13 cents, not terrible, but yes, it's better than 2 cents. But
still bad.
Not great. You're right. Not great. But nonetheless, I guess these days, if you're left holding the bag out there in Credit Suisse, you'll take any lifeline you can get, as we'll keep on rolling right on into the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody, welcome to the strategy block, the portion of the show where Uncle Mike takes the reins and dispenses some options, wit, and or wisdom. Uncle Mike, I left you about 11 minutes to discuss the just amazing career of one Bobby the Brain Heenan, sir. Have at it.
I would love to, but I will say this. If any of our listeners ever want to talk about Bobby the Brain Heenan or anything pro wrestling, check out my website. Reach out to me. We'll talk some pro wrestling if you'd like. So I'm happy to do that at another time. But what I do want to talk about today is something that you don't hear a lot about, and you're going to hear a lot more about it from me in the near future. Just a lot of the studies that I do in my trading / investing laboratory, there's a lot of theory and a lot of things that go into it before I bring it out to the general public on this show or on my YouTube channel or on just to my clients in general. And something that I've been spending a lot of time studying over the course of the last year is something called sequence of return risk. Now, how does this work? Well, I'm going to oversimplify this for today's strategy block. Because of the fact that, Mark only gave me 11 minutes, but I want to keep this simple just to kind of give you guys an idea of the concept as to how this works. So a study that I'm working on right now is I'm looking at taking money out for my retired clients. And this is something that I've been doing my whole career, but I'm always looking to get better and become more efficient at it. So once you retire with your nest egg, you need that nest egg to live off of. And so unless you have a pension, Social Security, you're living off of that, whatever. But you usually need some money to live off of from the nest egg with which you save. And so what people ask me about is with sequence of return risk, why is that such a big deal? And so the study that I'm currently looking at right now is, let's say we do have another set of 20 years, like between 2000 and 2020. In other words, a time frame to where when you're taking money out of your nest egg, the market is down in value. Well, that's a major risk. And with that risk, you're never going to get that money back. So in other words, let's say that you take money out of the stock market in a down year. Once again, you're in the distribution phase of your retirement, meaning you're taking money out. You don't have time for the market to come back. You are losing money. Not only are you getting out of something that you're selling at the low, but you're never going to get it back because you spent that money on groceries or whatever it is you're going to spend in your retirement. So what I'm looking at right now is, let's say someone has $1 million. And I'm oversimplifying this. I would never recommend doing this, but let's just say that they put 100% of their money into the stock market and the S&P 500. And most financial advisors say you want to take 4% out of your retirement nest egg per year, and usually that can last you 20 to 30 years. Because after all, no one wants to run out of money. And of course, it also depends on what you invested in. But overall, between 2000 and 2020, the S&P went higher. It went from 1455 to 3756. So it did have a good run. So by taking 40,000 a year out of the S&P 500, immediately your money does not go from $1 million to $960,000. It goes from $1 million down to $858,600 in the year 2000. That's kind of a bad thing because 2000, the market was down 10%. Now, of course, in 2001 and 2002, it continues to go down 13% and then another 23.3%. So if you're just taking out $40,000 a year from that nest egg and you have 100% of it in the S&P 500, you've lost almost half of your retirement within 3 years. That's not good. Of course, the market did come back and things worked out fine. And you actually have a good chunk of money left at the end of 23 years. However, let's say that the chunk of money that you have left, if you have no covered calls, no nothing, would be $410,212 after 20 years. Not bad. But let's say that you're going to take 100% of that money. And once again, I don't recommend doing any of this. But let's say that you were to take 100% of that money, put it in the S&P, and you sell a covered call, a 1 year out covered call, and you're getting 10% premium on that covered call every year. Some years you can get that much, some years you're not. Or let's say that you want to get, you go 1 month out, whatever the case may be. Let's just say you go at the money and you're getting 10% a year on a 1 year at the money covered call. And that $100,000 you get the first year, let's say you take 40,000 out of it and you live off of that, and the other 60,000 you reinvest, and we'll just do that every year. If you do that for 20 years, your money, your nest egg at the end of 20 years is going to be $1,032,067. Now, my point is this, folks. What the covered call does is it helps protect you from sequence of return risk. And I'm not saying that you put 100% of your money into the S&P 500. Of course, I would never tell that to anybody. But I want to just give you an idea of how the covered call can really protect against sequence of return risk, which is a real thing for people who are who are in their retirement and need to depend on their income. And with that, like I said, the S&P 500 had a very bullish time between 2000 and 2020. But when you start off with down years, that can put a big dent in your retirement nest egg. Covered calls are something that you can use during retirement if used properly. And this was just a very simple part of my study that I did within probably 20 minutes of setting up an Excel spreadsheet. There will be a lot more on this on my YouTube channel in the near future, as well as strategy blocks, because sequence of return risk is a risk that not a lot of people like to think about, because after all, the market goes up over time. But if you have to take money out during certain times, it does not come back. And that is the strategy block for today. Not quite 11 minutes, but I did my best.
Not bad at all, sir. As we keep going into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you exactly what we're keeping an eye on for the rest of the week until our next episode on Thursday. We also tell you what the heck's going on with our question of the week. Keep an eye on that right now. We're asking you just kind of a fun, straightforward one. Just something along the lines of what we were debating recently on our Options Bootcamp program. And it boils down to this, very straightforward. What's your favorite option strategy to leg into stock positions at lower prices? You have your obvious one, of course, your straight up short put. Some people like a good 1x2 put spread. We've talked about that before, of course, buying one, selling two at the lower level there. We talked about that a lot of times, most commonly on Options Oddities with the Rock Lobster. He loves those. So that's another one out there. Or we just gave you a simple other. There are many others you could use out there. So if you do choose other, we want to hear your thoughts. This is obviously a point of contention, a point of discussion right now, as stocks are, not today, obviously, but in general, have been trending lower a little bit of late. People are starting to use options to nibble at their preferred levels. What is your preferred way to go about it? Right now, as you might expect, short put taking it in the early voting, I should say, but not as much as you might think. It's 60-40 right now, with 40% coming in for the old 1x2 put spread. Again, this just went live a few minutes ago, so we'll have updates on this throughout the week. Ad Options is the place to go to make your voice heard as we go out. I'll pay off our last week's poll because we're kind of coming up against. We'll pay it off on the Thursday show as we go out now to the greasiest of meatball. Mr. Meatball, sir, a little thing called the Fed, I think it's called, talking this week. So obviously that's on your radar. In addition to that, what else are you watching, sir?
You know, I'm watching these banks. The story between banking and tech and how the money movement between them plays out, I think is a huge story and one that needs to be kept an eye on. So, you know, watch First Republic, watch some of these other names. They still look sick. And watch the midcap KRE that has been bludgeoned over the last few days and weeks. So, you know, keep an eye on that and what happens with the discount window. But how long is tech and Apple able to hold up this market is, I think, a really important question. And what happens when the banks start to calm down? How quickly does money move out of the Qs and into the diamonds? That is a trade that I am keeping a sharp eye on.
You know, since we're coming up against it, why don't you also tell the folks where they could find all of your goodness these days, sir?
Well, you know, I'm writing about VIX and volatility and doing stock breakdowns over at optionpit.com. You can read all about my take on JWN last week. I'm going to be writing up one on Occidental this week. So you can check those out, the Pit Report, and then you make sure you're reading the VIX Edge every day for all the best in volatility-related content.
And you're coming to Chi-Town in May, so maybe we'll squeeze in some fun live content there. That'll be fun.
That's the plan.
All right. And Mr. Uncle Mike, sir, what are you keeping an eye on for the rest of this week? A, and then B, where can folks go to find more Uncle Mike goodness?
All right. And A, first off, I did not factor taxes into the strategy block, but that is a big factor. So just wanted to disclose that to keep my compliance people happy. Just assume it was all Roth IRA money that I mentioned in the strategy block. In terms of what I'm keeping an eye on, of course, the Fed. I don't think there's anything else that's going to trump the Fed. Maybe Trump getting arrested. Maybe that's another story. Who knows? But with that, I think the Fed's a big story of everything right now. To get more information on what I do, feel free to follow me on Twitter at Mike TOSAW, TOSAW, or check out my website, stcharleswealth.com.
All right, everybody. That music means that's going to do it for this episode of the Old OB. Of course, that's not going to do it for our broadcast day. Join me back again in a little bit. All you live folks will get it in your ear holes in a little bit with myself and Mr. Bill himself talking about all the craziness going on in the world of crypto. And there is some craziness, so stay tuned for that. Back again tomorrow with none other than the Viceroy himself answering all of your questions out there. Wednesday, Options Bootcamp. I'm not sure if we're going to be doing 1 or 2 on Wednesday, so stay tuned for that. You're going to get at least one live in your ear holes and perhaps a double extravaganza this week, so look forward to that. And then back again on Thursday, another episode of The Option Block. Stay safe out there.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.